All right, y'all, so now we are going to talk about, to me, the most important segment of looking at the company's financials. So we already talked about two other segments. If you haven't checked them, go look it out. We talked about the balance sheet. We talked about the income statement. Today, we're going to talk about the cash flow statement. Now, the cash flow statement is an amazing statement because it's going to talk, matter of fact, we're going to break all that down. Listen, make sure you like right now, subscribe right now, get in the chat right now. Tell me, how can we help you at the end of this video? Tell me how do we help you? Give us some ideas on how we can help you moving forward, because the goal is to help you move your financial needle. Now, the most important thing we want to think about this is this statement tells us how the company is moving money in and out of the business. Now, we're going to talk about these three things right here too. Watch this. We're going to talk about cash flow of operations, or you can say operations cash flow. We're going to talk about cash flow from investing, and we're going to talk about cash flow from financing. All right, now these are three ways that you're going to see that a company uses cash flow. Now, I wrote something down here, and watch what I wrote down. This cash flow statement is important for us because it is going to show us how the company uses its money to pay for operations and invest in the future. I wrote that down. So I like to write notes down because I don't be trying to memorize everything. You know what I'm saying? I like to write notes down so I can have key points that'll be in my head, right? So that thing I want you to think about your house. The cash flow is going to show you where all the money is coming from. Is it coming from operations? This may be, watch this, watch this, watch this. Is it coming from operations? This is your job. Is it coming from investing? What investments that you made? Or is it coming from financing? Did you lend somebody some money and you gave them interest on it? Right? Where is the majority of the cash flow? That's going to be important. Now watch this. By showing you how the company manages its monies, inflow and outflow, watch this, I wrote this down. The cash flow statement paints a better picture of the company financially than the income statement and the balance sheet. Okay. Here's why. Because now you know exactly where it came from. Now remember, on the income statement you have revenue. On the balance sheet you have assets. Right? Now, of course, you're going to get net profit. You're going to see a couple of things. But right here, you get to see, think about this. When you see a company when a company has earnings, right? That's going to combine everything that the company does. Earnings per share tells us every way that the company made money. So that's why some companies say earnings is good, right? EPS is good because EPS tells us, okay, this is all the money that came in. And together, collectively, this is how much the company generated. What we like about the cash flow statement is it says, no, this money came from here, this cash flow came from here, this cash flow came from here. How much debt did it cancel out? This lets us know all that. This paints the Mona Lisa financially. Right? Now, watch, I wrote something down for you. I said that also in this cash flow statement, what we can pay attention to is how much we started at the beginning of the year with and how much we ended the year with. That's important. That's important. How much did we start? How much did the company start the year with? How much cash flow did the company end the year with? The reason why that's important, because watch this. If we start the year with a lot of cash flow and then we see the cash flow decreasing, we got to ask ourselves this question. What have they purchased? Because remember, this is also for growth. What have they purchased? What have they invested in? What have they lended money to buy? Or, watch this, what did they invest in? Why did I say that? Because companies also buy shares of other companies. So Apple will buy shares of Microsoft. Berkshire Hathaway owns share of Apple, owns share of, like, companies also use cash to buy stocks from other businesses. We talking about cash from operations. We talking about cash, we're gonna put CI, cash from investing, and then we're gonna put CF, cash from financing. So I wrote this down, right? Watch this, cash from operations. A decrease in cash flow from operations can tell us that the company has a hard time. Watch this. If you see a decrease in cash flow from operations, that's telling us the company is having a hard time either collecting or selling. So we see a decrease in cash flow from operations. That's telling us the company is having a hard time from collecting or selling. That's major. Now, if we see something to invest in, watch this. Investing includes money received or used for investing activities, or buying stock in other companies, or buying other equipment and property, right? So here's the investing part. They're using money for investments, equipment, property, stock, or you can be like Warren Buffett, bonds. So this is the cash flow from investing. Operations, this is gonna be their main product, investing, and now finances. Watch this. Money coming in from lending. Stock or cash. So that's what companies do. They issue out stock, they issue out cash to get that for a turn. Why? Because we know that a dollar that's not moving is the dollar that's losing. And so, just like you, that's why I always say I want you to look at yourself as a stock, as a company. You have to look at yourself as a company because you have to learn how do you manage your money. Where's my money going to? Where's my money come from? How much money is going here? How much money is coming out of here? These are the things that sets us apart from everybody else, y'all. So even we looking at these companies, we can ask ourselves this question. With my money, like, what is the money you getting from your job? Is it slowing down? Are you getting more overtime? Are you not getting more overtime? Are they cutting hours? What that is, investing, right? What are you investing in? Are you investing in stocks? Are you investing in equipment? Are you investing in, do you got a side job? All of that would come from that. Finances, what are you doing? Are you lending money out? Are you buying real estate, doing certain things? These are the things that are important for us as individuals. But if we look at these, cash flow from operations, cash flow from investing, and cash flow from, now here's a cheat code. Anytime you see something negative when you're looking at that means that's money going out. That means that's money going out. So you're looking at that cash operations, and you see a negative sign, that means that's money going out, man. So at this point now, we done broke down the income statement, balance statement, and cash flow statement. You should be on your way. If you haven't checked out the Wall Street Trapping course, check it out. It goes super in depth on how you can break this down, man. Listen, I hope you enjoyed this video. I hope we gave you some insight. It's your boy, the Wall Street Trapper. Make sure you like, make sure you subscribe, get your trapper attire. Also, let's catch you each Tuesday at 7 p.m. Eastern time on the Wall Street Looks Like Us Now network. It's called Trapping Tuesday. I love y'all, man. I'm out.